Welcome back, everyone. This is a brief update on news from the oil market. The OPEC meeting taking place in the previous days had exactly the expected outcome. That was to prolong its production cuts for an additional period of 9 months, from 1st of July 2019 to 31st of March 2020. Oil traders were not at all surprised from the outcome, as the decision was basically pre-announced from OPEC officials through indirect comments that could have aimed towards keeping prices from spiking. No significant market reaction took place throughout the start or end of the meeting, and we could say oil prices had already priced in the scenario of production adjustments by OPEC and non-OPEC team members. The oil-producing group made clear reference to uncertain geopolitical and economic risk conditions around the globe that in their report referenced as a barometer towards its decision on production levels. That is also the reason that the OPEC meeting was postponed for after the G20 meeting, as the geopolitical matters would prevail in Osaka, and a clear view would make it easier for OPEC to lock in on a decision. Moving to the US and specifically West Texas, where they are extensively trying to prepare new pipelines that would help resolve the problem of transporting oil. US production is expected to increase in July as forecasted by the US Energy Information Administration, and so further preparation will need to take place in order to easily storage or send oil through pipes to specific locations. US firms are not only in a hurry to lay pipelines, but also have to make sure of the storage space and connections, otherwise it could fail to handle full capacity. Unexpectedly, reports indicate Venezuela has picked up on oil exports for the month ending June 2019. Venezuela, represented by state-run oil firm PDVSA, is now sending oil to Asia, which helped exports reach 1.1 million barrels per day and led to an increase of 26% in exports compared to May. Its most significant buyers are China and India, which took 59% and 18% correspondingly. Yet, very impressively, Venezuela exports have increased since the sanctions the US imposed and could be in for a comeback, as they have plans to move into tests to reorganize its oil production in order to boost exports of grades, which has more demand by Asian refiners. As a conclusion, analysts are now referring and turning their interest towards the second half of the year, as many things could change. Saudi Arabian Energy Minister and Aramco CEO Khalid Al-Falih stated that the trade truce between US and China could bring further support to the oil market's future. For more in-depth investigation, please refer to our written report, which also includes technical analysis. For more information and trading ideas, you can visit our webpage. Follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.